Hey, welcome back. We don't normally do a midweek review, but we wanted to bring you guys some news because we got a lot going on in the office to start the year off. Right now, we're doing a full-scale rebalance across the board and making some adjustments to accounts and things like that. So, Quint, why don't you speak a little bit more to what we're doing there?
Yeah, first of all, Happy New Year, everybody. Hope your year is off to a great start and you're healthy and moving forward here wherever you might be in the United States. If you're a client of ours, it's typically around this time of year, barring different circumstances where we will look at across all of our accounts and make some changes. Sometimes those changes are minor tweaks if allocations have gotten out of whack. Obviously, last year with the equity side doing quite well, bond side rebounding as well. Some equity allocation and bond sides are sort of out of whack and they need some changes, and that's normal rebalancing. However, on occasion, like this year, we're doing some other adjustments where we're really taking some shifts and some funds away from certain sectors and certain areas and going into other areas and other sectors. And I won't speak too in-depth to that because this goes out to everybody, not just clients, but please know that as you look through your accounts and you see, the activity, it's normal standard rebalancing and minor tweaks as we head into the new year. If you have any in-depth questions about that, please do reach out, let us know. That said, it is worthy to note that now with the day and age we're in, there is zero transaction fees. There's no altruistic motive whatsoever. But if you're wondering what's going on in the market, which we'll speak about in just a second, that seems to be true across the gamut. I think a lot of people are doing some pretty significant rebalancing. It's evident in areas that have been pulling back in the market and other areas that are doing quite well. In fact, I don't think it's any surprise to see the Dow Jones Industrial Average be the first index to break out to new all-time highs. Yeah. The Dow 30, typically industrial type stocks, it's not any longer, but 30 wide variety of stocks, ironically not just your big cap 7 tech names. Right. So we are seeing this strength widen in the market. We're looking to take advantage of that, and we're looking to do some rebalancing accordingly. If you have a taxable account with us, please know that we will do intricate and subtle shifts when and where needed, and certainly be respectful of taxes and not, create any undue tax liabilities.
Yeah, so you'll see those transactions coming over the next couple of days and couple of weeks. You'll see a lot of different movements, so you might get some notifications for Schwab and things like that. So just look out for that information. And then, Quint, anything else going on in the world that we should be aware of or kind of understand?
Yeah, it's interesting. So we are cutting this on Wednesday. In full disclosure, I'm preparing to take my wife away for her birthday for a long weekend. So that is one reason we're not bringing it to you on Friday. But it's been interesting, Logan, to start the year. There really hasn't been a lot of news flow. However, under the surface, there's a lot happening. Congress seems to be making progress. People seem to have forgotten, and that's okay, that we are running up against a debt ceiling again mid-month, and it looks like Congress is making proactive progress to getting that taken care of. They have passed the the top line spending side of the budget, and now they're working on the intricacies, and it looks like we won't have an issue there, so that's a positive.
It looks like they'll get some kind of deal done.
That's exactly right. Now, what's interesting, and this really goes hand in hand with the economic data that's coming down the pike. For example, tomorrow, which is a Thursday, we'll see jobless claims, and then Friday, or is it the other way around? Thursday's CPI and jobless claims, and Friday's the PPI.
Yeah, PPI,
yeah. Mm-hmm. But it's going to be interesting to see if the jobless claims starts to reflect the headlines that I'm seeing every day. Today it was BlackRock, Amazon. I've seen Nike. I've seen other companies like Twitch and other technology companies layoffs.
Yeah, even though the data that we've seen has been really strong, but there's a lot of news that say there's layoffs kind of across the board.
There is a lot of layoffs happening. So in my opinion, it's only a matter of time until we start to see that in the data. And then as we start to see it in the data, that, ironically, while not great for the economy, it bodes well for inflation, interest rates, and also the market. It kind of goes hand in glove with our general thesis that 2024 is going to all be about the rates coming down. stocks hopefully appreciating due to that, and the markets continuing to climb a wall of worry. One piece of note that I'll also put in the weekly review, the written edition that'll come out on Friday, is money markets hit an all-time high again. So once again, markets are at or near all-time highs, and it remains, in my opinion, as noted by the money market accounts, the most hated bull market that I've ever seen.
Yeah.
It's quite amazing.
Yeah.
Anyways, that's all.
Yeah, okay, great. Well, you guys have a great rest of your week. We'll be touching base with you soon.